Hey guys, welcome back. Welcome to the second day of masterclasses this weekend for the Account Aggregator Hackathon. We're really excited about today. And before I introduce the first speaker, a little bit of housekeeping. So yesterday we were supposed to have Amit Bhor, who is the co-founder of Walnut, which is India's #1 PFM app. He was supposed to give a masterclass on PFM yesterday. Unfortunately, we had to reschedule him. So we'll post the new time and date for his talk in the Hack Bible and on the Slack. So just make sure that you have read the Hack Bible. Everything is there. Whatever you need for the hackathon will be in the Hack Bible. And make sure you're in the Slack because all important notifications will get pushed out there, as well as the Sahmati, Twitter and blog and stuff like that. But Slack and Hack Bible, I can't stress that enough. So without any further ado, let's go into our first masterclass. Very excited today to welcome Dharmesh Ba. Dharmesh is the head of research at D91 Labs and Setu. So many of you might know or have heard of Setu, which is a financial infrastructure company. D91 Labs is a user research lab for financial inclusion. And Dharmesh can tell you more about his work there. So thank you for being here, Dharmesh, and over to you.
Thank you. Thanks, Ayman. Let me just share the presentation. Yeah, hope you guys are able to see my screen. Good afternoon, all. Thanks for coming to this masterclass. So, how I have structured the content of this masterclass is primarily to talk about what will be the basic difference between probably designing other applications like a hyperlocal app like Swiggy, Ola, versus when you're specially designing for financial services, what is going to be the difference? And also specifically in terms of when you are dealing with a lot of data in the picture, what is going to be the challenges and opportunities in it, right? So I run a user research lab called D91 Labs. What we do in D91 Labs is try and understand end consumers' perspective about how they manage money. It could be a SME, it could be a merchant, it could be a gig economy worker, it could be someone from a rural background, or it could be people like us who how are millennials looking at banking and how are they kind of spending, where are they spending, how are they saving, what is their perspective around money. So we collect a lot of these stories and we publish them on our a Medium publication, and most of them are open source for the community to consume. So most of the ideas that I'm going to talk about in this masterclass is the reflection of our repeated conversation with users. Without further ado, I'm just going to get into the first thing. So the first aspect is around this the new mental model of how we are purchasing goods and services. Traditionally, our mental model of how we purchase products is around is a monetary trade, right? So you pay money for something and you get a service or a product in return. I'll give you a simple example. Let's say you have a simple product like a coffee. So the coffee you could get it in a Starbucks, you could get it in Chai Point, or you could get it in a Tela Wala shop. Now we know that the coffee costs a 200 bucks in Starbucks, and the coffee costs like around, let's say, 50 bucks in Chai Point, and costs around 10 bucks in the roadside shop. So we know that the money that you're paying for the 200 bucks coffee does not directly relate to the product itself, but we are paying a lot of this implicit value, right? So the implicit value goes into the ambience, it goes into the environment, it goes into probably the infrastructure that is put into the place. Tomorrow, when your Telawala shop kind of charges you, let's say, 100 bucks for a coffee, you know that's a lot of money, right? You will understand, you will start thinking around saying that this is not right, this is overpriced. So which translates into the fact that we have this imaginary scale in our mind as what is the right product and what is the right price, right? And when there is a mismatch between that, we don't kind of opt that service or a product. Now I'm going to take that same mental model and translate it when we kind of buy products and services with respect to data, right? So we today, a lot of the applications that we use, like could be Facebook, it could be WhatsApp, or it could be YouTube, TikTok, Instagram, whatever it is. Most of these products are free. They're not really free, but we kind of exchange our data, the data that we create in these platforms are being traded to show us some advertisements. Now we are going to extend the same mental model into the financial services, right? So how are we going to design around for this new data trade? So which brings back to the most important question is how are we going to measure this data trade? How much data is good data, right? So the only way a lot of us understand measuring data is the volume of data, right? In terms of how we measure it as KBs, MBs, and GBs, which kind of loses its relevance when it comes to the current context of account aggregators. It's not about the volume of data, but it's about the significance or the importance that we associate with each of this data, right? So, for example, is there a possible way for us to map the financial products to the ideal sets of data? For example, if you're trying to provide a cash flow based lending, a 500 rupees loan, how much data is good data to be shared, right? So who is going to take the call? So if you're designing as an account aggregator, can the account aggregators help the users explicitly say that the amount of data that you're sharing for a particular purpose code is good enough or not? Or in the other case, if you are a FYU who's trying to get the data from the user, will you be able to tell that your products or services that you're going to provide to the user will change based on the amount of data that you share? In traditionally what happens, let's take a very simple product like a loan product. When you approach a bank or an NBFC, it's either 0 or 1. There are very rigid rules around saying that if you want this particular loan, let's say a home loan, I want you to provide so and so documentation, I want you to provide so and so proof, and I want you to have these collaterals, right? So it does not really, I mean, probably they don't customize each of these products uh, as per individuals, right? Today you have an opportunity to probably customize the offerings and give associated products based on the amount of data they share. How are you going to translate this and tell this to the user, saying that if you share more bank accounts, if you share all your bank accounts, you probably will get less interest rate. If you are able to share all the different your associated accounts, I will be able to provide a better portfolio management. If you want me to give a better expense management solution, I want you to share all of these data points, right? So how are we going to communicate this becomes the primary challenge. And one way how to think about it is the consent artifact that we're going to, which lies as the central core of the account aggregators, is almost like the gateway for the data sharing, right? So that designing of that consent artifact becomes a very, very crucial thing. So even though in the first go, it sounds like a very simple aspect where you say that, these are the data points that needs to be shown. And so I'm going to show and help them get the consent. It's walking on a very thin line, right? I'll tell you how. So I look at consent artifact as something new which we haven't kind of been exposed to till today. Most of the consent artifacts has always been terms and conditions, which I'm pretty much sure like most of us don't read, because the application says that only if you accept it you'll have to go inside. Our intention at that point in time is to mostly to use the application, so we just click I agree to the terms and conditions and we move forward. But here it has to be, this consent artifact is very explicit in nature, so which essentially means that for the first time you are designing a consent artifact where you'll have to make sure people read it, make sure people understand it, make sure people know the effects of sharing this data, right? So to draw a parallel, think about it, consent artifact like designing a toy for a 4-year old, right? A toy for a 4-year old cannot come with a manual so that the kid can read and then play with the toy. So once you give the toy to the 4-year old kid, he or she should be able to figure out what they can do with the toy, right? If you give them a ball, they should be able to play around with it and figure out, oh, maybe this ball bounces, I can bounce it out and play, right? Or you give them a Lego, they should be able to fix it and say that, oh, maybe I can build something out of it, right? So that is how if you're designing any new a digital product, that's how if you have to make sure that the entire India has to understand that is how you'll have to design it. You cannot design it with a manual. You expect people to read and understand and then use it. So the consent artifact, designing of the consent artifact becomes the primary challenge, right? So there is a term called affordance in design, right? Affordance is the ability, the perception of what you could do with an object. Like the moment you look at a button, you know you could press it, or you look at a switch, you know you would be able to press it. So similarly, if you're designing consent artifact, the user should be able to know what they can do with it, right? What they should do with it and what they should not be doing with it, right? So that of the bringing in the affordance inside the consent artifact is one of the primary things. I think most of the use cases that we're going to be designing for the account aggregator hackathon needs to be kept in mind, right? So moving on to the next thing, right? So I spoke about the consent affordance aspect of it. So moving on to the next thing, I'm just going to talk about some of the challenges and opportunities that comes with respect to designing, especially for fintech, right? So I'm just going to talk about the larger aspects around it, and maybe during the Q&A, I'll be able to take it further down the line based on what kind of questions you guys have. The first aspect about it is the explainability. How might we help the user in understanding the product? So when you talk about the understanding of the product, I'm going to divide it into two aspects. So one aspect is understanding the financial product itself. Like I said, traditionally the products have been financial products have been they're not really catered to every individual. It's mostly the products have been designed, and then you figure out whoever is eligible for the product, they come and claim the product. It could be loans, it could be mutual funds, it could be portfolio management services, etc. So today you have an opportunity at scale to say, oh, based on the amount of data, I'll be able to customize this product. How are you going to explain this to the user? I'll give you a very simple example. So most of the QR code based payment apps, when a merchant gets a QR code, he's also explained that that he or she will be eligible to get a loan the more transactions that they do through a QR code. Um, with the intention of getting a loan in the future, the merchant starts accepting digital payments through the QR code, and he's looking forward to get a loan. Now, what happens is when he becomes eligible for the loan, the first loan that is given to him is somewhere between 500 rupees to 1000 rupees. And most of the people that we talk to kind of become very disappointed with it, because in an anecdotal manner, one person told me that hey, I want to open a shop where I need 2 lakh rupees for the advance that I need to give, right? But this app currently tells me that I'm eligible for a 5,000 rupee loan. I don't even consider 5,000 rupee as a loan, because that if I take the loan, I will be able to spend it in a day or two, right? But I want 2 lakh rupee loan. I don't know how to reach from 5,000 to 2,000, 2 lakh rupees. His mental model was that if I go to SBI, they will clearly tell me whether I'm eligible for a 2 lakh rupee loan or not, right? And they will also tell me steps. If I have to get a 2 lakh rupee loan, what all I should do. Now, in this scenario, I am little lost, right? So at this point in time, the shop owner was lost, and he kind of is trying to ask the representative who sold him the QR code. The representative also does not clearly understand how the entire the machine learning or the algorithm works behind it. So they both were lost. They said the only answer that the agent was able to give the merchant at that point in time is, you should continuously keep using this for longer time, and you will be eligible, right? So that unpredictability is something that kind of put off the merchant at that point in time, right? So similarly, when you are providing financial services based on the data, that mental model of how this is going to work, or how the customization is going to happen based on the data, needs to be explicitly told upfront. It's just not enough in the FYU app that you say that hey, can you share your bank statement and insurance, right? So you should also be able to communicate to them, saying that why a bank statement is important and why an insurance is important, right? And what if the user is not willing to share two of the financial information, and if he's willing to share only like one of the financial information, right? So we've been talking to a lot of the users where they say that, for a bank loan to happen, I am open to share my bank statement, I'm open to share my income tax statement, I'm open to share my insurance, but I won't be open to sharing my FDs and or my in savings and investments, right? It could be very anecdotal in nature. We're talking about like a bunch of 10 people whom we interviewed very recently. But the fact that, they say that, certain information is very personal to me, for example, the PF or like the banks, the mutual fund investments is very personal to me. I'm not willing to share it with anybody else. How are you going to capture the emotionality that is associated with their data through your application, right? So that's the first thing that I wanted to put forward with this, that, how are we going to tell them that the products will be customized based on your data. Second thing is also why each of these data point is important and what will they get out of it when they kind of share it, right? So, for example, there might be a lot of cases where an individual would share all the data for getting a loan, but after evaluating most of these data points, he or she could be rejected because your algorithm did not allow him or her to get the loan, right? So now at that point in time, it becomes almost like a black box. So I gave you a lot of data, you processed it, and you now tell me that, this, I'm not eligible for a loan. But I already did my part of giving out the data. Now what happens to that? Right? So can you also put in explainability as your core principle at every different touch point? Now at that point in time, if the particular individual is frustrated, he or she might not be visiting your service ever again, because it is almost equivalent to ripping off somebody's money in a very loosely shown term. But rather than that, can you also tell them that, hey, you probably are not eligible for a loan right now, but if you do A, B, and C, we will be able to give you this loan, right? So that journey of how the particular individual can travel within your product could be a great point for you to add explainability as one of the most important notions. Now, the third aspect of it is what I wanted to talk in terms of the tech literacy, right? So you could have built a great product that could be a great value proposition in all the products that you in all the features that you have built inside the product. But at the end of the day, if your navigations and if your user experience flow are complex in nature that most people don't understand, right? For example, if you use heavy text, right? If you're using a lot of jargons, or if you're using it could be a lot under patterns which people are not familiar with, right? So lot of those can act as a hurdle for them to navigate your product and even get access to the product, right? But you'll also face the reverse situation here. So especially think about it from a user's perspective. In a normal world, if I have to go and get a loan, it's not a very simple process. It's a very well planned process. I'll have to plan way ahead of my time. I know that, I have to go back and forth with the banks, and I'll have to go there might be a lot of negotiations. I might have to understand the documentation, ABC, etc., before I get the loan in my hand. Now, if now the current situation, what happens? Like say, for example, when account aggregators are introduced, and if you're building a app where you're able to disburse the loan immediately, now there's one point you could think there is a sense of delight, right? But typically, a user thinks about how did this happen so fast? There must be some catch in it, right? So then they start thinking around, is it even a trustworthy product? And sometimes the unintentional friction in the offline world also creates an importance towards a particular service. But when you completely remove it, even though it looks like magic, and you know that magic is not real, they start doubting the entire service, right? So how are you going to gain the same amount of trust that an offline manager or a physical building will be able to is able to create it in an offline world with a digital application in one or two clicks, right? So not every time your the simplistic manner or the less number of clicks. So one of the things that I keep repeating is, do not try and create the e-commerce model into the fintech services, right? So in the e-commerce model, you are trying to optimize for the less number of clicks. Like, oh, I want him to quickly check out. I want him to go. I have to browse as much as possible. Once it's there in the cart, I want him to quickly check out. Like you're tracking the number of clicks. Like it should be less than 10 clicks. It will be less than 5 clicks. But imagine the same scenario if you try and apply it in financial services. You're actually creating dark patterns, right? If there is a loan agreement that is there in place, or if there is a portfolio management services that you do, or an expense management services that I'm providing, people have the rights to know what they're signing up for, right? Because it's not like e-commerce. Once the product is delivered, then the relationship between you and the e-commerce kind of it detaches, unless you have like returns and stuff. But basically, once the product is bought, then the relationship between you and the e-commerce is largely like disconnected. But it's not the same case here. Look at every financial product. There is always a catch post that if you take a loan, it has to be repaid. If you invest in mutual fund, it has to be redeemed. If you buy an insurance, it needs to be claimed at some point in time, right? So there is always an existing relationship between people. So please, when you are designing products, do not optimize for the number of clicks, but mostly optimize for the explainability. How well can I make someone understand? And if it's okay to introduce intentional friction, given the fact that it explains people better about what they are signing up for, right? So that's about the explainability factor of it. Yeah. But the second factor is around the reliability factor of it. So this is something I touched upon in the first point also, where the amount of money that goes into the trust and the branding. For example, some of the huge banks is like, say, for example, for your private sector banks or public sector banks is large because they've been in the industry for more than 25 years, 50 years, and they've gained the trust of the user, right? It could be because of the advertisements, it because of the good relationship that they have shared with people previously, and that's huge, right? So I remember a conversation with someone that in the fintech industry. He told me that when a small merchant is getting a loan from a big bank like HDFC or SBI, right? He's very proud about the fact that he's gotten a loan from one of these products, and he's even open to putting them in the name board, saying that a financial partner is HDFC, financial partner is SBI Bank, and stuff like that. So when he kind of is in a situation where he has to take a loan from an online lender or a fintech application, is not very proud about even telling that to their friends, right? So when we try and understand why this happens, is because it's a very closely knit social community, and when the individual has to go out and tell his fellow partners or friends, saying that he took a loan from a place where which does not have a physical presence, the first question that implicitly comes to everybody's mind: oh, you probably were rejected a loan in a big bank, and that's why you had to go to a place whose name we don't know, right? So there is largely a taboo between just an online applications who are just providing services versus services who have physical location branches and relationship managers. Now, this is not something that we could solve immediately. There needs to be a larger societal change, and there needs to be a journey towards it. But that's something you need to consider around it. So, how this will translate is around having trust markers through your entire journey, right? And giving them options of saying able to reach to a customer care, or being options to able to reach them on social media or email, and making sure that they're being serviced regularly is one of the point. The second point is also around the accountability factor, right? Sorry, the third point is around the accountability factor. Now, the accountability factor comes into the picture because when account aggregators come into picture, most of the applications are going to be the user experience phase of lot of financial products at the back. So what I mean by that is, you probably would not be an AMC, but you could be a broker who are aggregating these the different funds from multiple different AMCs. So imagine, for a simple mutual fund investment, the number of players that are involved into it. So one could be the application, or who acts as a broker. who's kind of going to the who is kind of acquiring the customer. The second is the funds that you kind of aggregate within that. Now the third is within the AMC you're picking a particular fund, right? So that is third level, and within the fund you have, like, the risk parameters around it. So you can keep drilling down the parameters into it. So when something goes wrong in their entire flow journey, who is accountable for it, right? Whom should they be reaching out? And there should never be a blame game that is being played. Right? So it's a very similar situation that today a lot of tier 2 and tier 3 users face with respect to UPI, because when in the UPI there are multiple different players that are associated with it. So there is an originator bank, then there is a UPI app, and then there is NPCI, then there is bank that is kind of takes, I mean, where the money reaches out. People don't understand most of this, right? They don't understand the mechanism of how these different systems work, right? And whenever something goes wrong, they are put in a situation where they don't know whom they should be reaching out to, right? And sometimes it goes like a round robin where they say that, oh, from here the money is gone and there it has not reached, you should reach out to them. And for that amount of time they're going to be spending to figure out what happened with their own money, if it exceeds a certain threshold level, they're going to give up on it. So when people, for example, let's say for if you're trying to buy something in Flipkart, or let's say you're trying to buy a simple thing like socks, right, or a shoe. You buy a shoe and you found out probably the shoe is not something that you wanted, and you probably had an experience that was not very happy about. Maybe you're thinking that, maybe I shouldn't buy from this e-commerce after that. But what happens in terms of digital payment, right? So even if you're using one particular UPI app and you had a bad experience, you're not going to be using digital payments itself ever. It's not about the app, right? So most of these people are coming to this particular product for the first time, and we'll have to make sure that the experience is correct, or the experience is right enough for them to stick through this entire digital payment journey, or the digital lending journey, or the digital investment journey, right? So it's and if you get it right, and the social virality will help you expand your product's reach in multiple fold. But the reverse is also true. When you screw up something in terms of the accountability, when one person has lost their money, or does not know how to kind of get the money that is stuck there, and that message also spreads like spreads in a much more faster manner. And it's always the stories and the narratives that moves from one person to another person kind of creates the trust or breaks the trust, right? You would have clearly heard that, oh, my friend, he lost money with this, right? Oh, that particular friend, he kind of invested in it, and he did not get the money back. So my family is never going to invest in stock market. And this is something you would commonly heard. The father would have done a mistake, and the son and the daughters wouldn't be investing in stock market anymore. And that's going to be a similar mental model here. Like, once I get a good experience, I'm going to continuously, repeatedly keep coming to the platform, keep coming to this entire digital financial services platform. If not, I'm not going to come about it. So I might lose the entire trust of it. So these are the 3 points I wanted to talk about around it. So at this point in time, I'm just going to stop, and probably I will take more questions if there is any particular direction that you guys want me to go towards. Yeah, and that's it. So you guys could reach out to me on the Slack channel. So we have a channel called UI UX Mentorship, and if you have any doubts, please reach out to me on the Slack channel. I'll be happy to help more around it. Yeah, so we could take questions.
Awesome. Thanks so much, Dharmesh. Can you see the questions on the right in the questions tab?
Yeah.
So if we just go with the most upvoted questions first, guys, please put your questions and upvote any questions that you also want the answer to. And yes, Dharmesh, if you could please start with the top
Yeah,
one.
sure. Let me read out the question also. Is there a case study by D91 Labs which specifies what all data is considered personal and not shareable by people, right? Yes, we've been doing a little bit of a research and like exercise with people to understand which data point is more important to them. So we play a small game where we ask people saying that, imagine you are in a situation where you will have to take a loan, and you have four options that you will have to go for, right? So one is a public sector bank, one is a private sector bank, one is an NBFC, and another is a fintech app. Which one would you prefer is our first question. The second question that comes is, for this loan, what are all the data that you are willing to share, right? And the data starts from your name, personal identification information as one, KYC as second, bank statements as third, and savings and investment statements as fourth, insurance as fifth, and social media information as sixth. Right. Let's take about the first question. So in the first question, when we ask people what is your most trusted source of institution whichever you would take a loan, right? Inherently everybody tends to move towards a private bank or a public sector bank, right? Now, though they directly talk about saying that, I want to take a loan only from these two banking institutions, but they also voice out the challenges that they face in terms of taking a loan from there, right? So one part is what aligns them towards it is the trust aspect of it. Second is the challenges around documentation and the time taken to process the loan, and the not being able to get the amount of money that they probably want for the current situation. When it comes to the data point perspective, right, the narrative always starts with saying that, oh, if I have to take a loan, these are the documents I definitely have to give, right? And if I don't give it, they won't give me the loan, right? So that's a very rigid requirement. So for example, so one parameter depends around is what is the urgency of that loan in my life at that point in time, right? And second is, if I have the urgency, what are the other options that I have at that particular perspective, at that particular point in time, right? So we have had stories where somebody wanted to take a home loan, and where most of the banks were not able to give him the loans. He had to resort to NBFC. So that's the hierarchy. They always start with where they could possibly get, and when people kind of figure out, okay, these are not my viable options, and that's where they trickle down to a place where who they're looking for options where who could give them the loan. Now if it comes to that aspect where I definitely need the loan and most of the institutions have rejected me, then I'm open to sharing whatever data this particular institution is asking me, right? And there you could think of two scenarios where you could say, okay, this is an opportunity for me to get all of his or her data, or you could still play the card of where you're saying that, we want only the optimal information because we trust you, right? And that's a interesting or the most important place where you could start gathering the trust. To make it very specific, in most of the interviews that we did, people were not open to sharing their investment data, right? Especially in terms of where have they done FD, where have they done mutual funds, and where have they put in stocks. It's not an information that they are willing to share for a loan, right? Of course, if you're trying to do for a PFM application, they should be sharing it, right? Because that's the whole point. But specifically in terms of the loans, they were not willing to share it. And the question that repeatedly arises, why do they need the data, right? What are they going to do with it? Because in my mental model, because in their mental model, they can't associate why this data point is required for them to take a loan, right? So we also went forward and pushed the limits and asked, saying that, will you be open to sharing your Facebook data or Twitter data or Instagram data so that they'll give you a better loan? And some people said yes, and some people said no. But where this answers come from is in their life, how they look at this particular social media and how much importance or they associate with it, right? One is the awareness aspect of it, like where people know that, what you could do with the social media data. And second is the importance that I have in my life with it. I know that, you could do a lot of things with my social media profile, but I don't post much. If you want to take it, right? So that purely depends on which kind of people you're talking to and what is the significance that they have with these different data points in their life. Hopefully that answers the question. I'm moving into the next one. If we are a team working on UX flows for concern journeys, do we have to stick to a design aesthetic of a specific AAs, is it okay to build a consent UX component that will be a baseline for all AAs in the ecosystem, especially in the consent artifact? I'll just say consent artifact design, right? Um, okay, so this is a very tricky thing at this point in time. So I think currently every AA has their own design of the consent artifact. I'm hoping, like hopefully, a few years down the lines, and we should be able to all come towards a certain mental model of how the artifact needs to look, right? So this is a very hypothetical scenario, because I don't know in future will people be using multiple AAs, will they be sticking to one AA? How will each of these, how will a user choose which AA to stick to, is all a very open question, right? But just talking purely from a user's perspective, I would be more comfortable having a concerned artifact which is standardized in nature, right? So the closest example that I repeatedly that keeps coming to my mind when I think of the AA use case is my Razorpay payment gateway, right? I know I'm talking to multiple different merchants. The moment I see a Razorpay payment gateway or an InstaMojo payment gateway, oh, I know the flow is going to be familiar from there, right? So I'm not spooked by a new interface every time, right? And also, what you think for if you are a FIU, what you think is aesthetic might not be the same thing as aesthetic for the another FIU. But so if you are an FIU, I think you will have to deal with a certain splash screen where you talk about the importance of the data. But when it comes to the consent artifact, I think the AA should control, and it should be similar from AA to AA, and within the AA, it should be the same irrespective of whichever FIU is invoking that consent artifact. That just to have the familiarity trust aspect of it. Moving on to the next one. When someone is conducting user research, how can one keep in check their confirmation bias? Right. This is a very tricky question, and this is a widely asked question in terms of the user research. Uh, One, you cannot keep your biases away. Only you could be aware of your biases. You cannot get away with the biases. That there's nothing called no bias. There's always some sort of a bias. The only thing you could do is to be aware of the biases. So one of the exercises we do as a user researchers is to write a lot, right? So we tend to capture a lot of these thoughts, and we write a lot about our own life, and you need a lot of self understanding, self realization about who you are and what's your take on the world, what is your ideology. Being aware of it will help you to be aware of your biases, right? So for example, let's say you are interviewing an individual who's coming from a lower middle income segment, right? You should probably look at them from an empathy lens and not from a sympathy lens. So what is the difference? Empathy lens is where you kind of feel being them, right? And sympathy lens is where you feel sorry for them, right? What you think is a bad state might not be a bad state for them. It could be in terms of money, it could be in terms of access to resources. Yeah, they could be just happy with what they have. But since you're looking at from a lens of a very privileged lens, you would probably think that, oh, they're in a poor state, oh, I need to help them, right? So that lens is something you could completely avoid if you're a little bit self-aware, also saying that how much privileged we are. Like also, we are very happy to identify ourselves as middle class, but we are not middle class. Like most of us probably in this airmate session also, we are one of the top 1% of India, and we should be extremely aware of it, especially if you're dealing with financial services and if you're also doing user research, right? Doing a lot of self-reflection helps you in being aware of your biases. Which is one fintech product, in your opinion, has done a really good job of building trust and incorporating explainability? Okay. Um, I can't pick up just one particular product. I think there are, I find something interesting in multiple different products, right? For for example, in terms of the Google Pay's P2P transactions are a beauty, right? So, for example, my friend who Kishore, who's leading the design at Google Pay, talks a lot around it, where they said that once you log in into Google Pay, it since they made sure the photographs that you see are of your friends, which is taken from your contact. So you already know that there is a sense of familiarity when you land onto the app. You can see that it could be your family members, your friends who are already there in the app, and you can also test. So you always get this notification in Google Pay where you say, "Do you want to send them 1 rupee?" Right? You might be thinking that what does sending 1 rupee mean? Like why should I even send? It's not even a gift, right? If you want to send, you probably, if you find it happy, you should send 10 rupees. So what people do with 1 rupee? But it does not come from the aspect of whether they're sending 1 rupee or not. It's about the aspect of telling people that the system works, right? So whenever somebody is trying out something new, they want to first play around with it, and sending 1 rupee is that incentive that you're giving for them to play around with it, right? So I'm okay to lose 1 rupee, but if I try and send it to someone that I know, that I can send it to them, then I can ask them on WhatsApp saying that hey, did you get that 1 rupee? And if they say yes, oh, then I know the system works, right? And similarly, when it comes to scratch card, right? So it could have been a very a cashback where they know how much they're getting, but the aspect of that predictability kind and gamifying that entire aspect of it in terms of the scratch card kind of gave them a huge boost in the initial stages, right? Of course, now you have reached to a saturation phase where it doesn't work anymore, and now they'll have to come up with this new methodologies to keep people engaged, right? So I think Google Pay, in my opinion, is a very interesting product, and I like lot of aspects of it, and especially, and it's a very conscious choice for you to put them as a chat interface, because a lot of us are, most of India is very familiar with WhatsApp, and the WhatsApp chat interface is kind of replicated at saying that Google Pay could be your financial application, WhatsApp for financial application, so that all my bills are coming as a chat, and all my conversation, all the money that I send to a particular friend is coming as a chat, and there's a trail around it, right? So I really like Google Pay from that aspect. Okay. The next question, given the problem statement, how can one tell the data set is a good data set? Now it depends on what data set you're talking about. Is it either quantitative or is it either qualitative and stuff? I can talk about qualitative. I'm not much of a quantitative researcher. In qualitative researcher, identifying a good data set, there is nothing called a good data set, right? So when you are doing qualitative research, you are looking for new themes and new patterns that you wouldn't have found otherwise. You should be open to serendipity in large, right? And also there is nothing called full data, right? For when you're talking to someone, you cannot capture everything. When, let's say, you're talking to someone only for 1 hour or half an hour, so that means you're going to get only limited data. All you could do is try to get different kinds of data. So the way how you ask questions will kind of that's the kind of answers that you would provoke, right? So based on that, you can get a variety of information, but you'll never be able to even figure out if you've gotten the full data, right? So that is why you'll have to do more interviews to figure out themes that kind of emerges from similar conversations. And you also have to understand, you're not trying to understand the person, the entire person as an individual. Probably you're trying to understand, let's say, Dharmesh in the context of how he's spending money, or Dharmesh in the context of how he's saving his money, right? And you don't really care about what is Dharmesh food habits or Dharmesh travel habits and stuff like that. So that is also a focus area. But by having that focus, you'll be able to narrow down the kind of questions and figure out what is a good data. Um, right. How do we ensure, the next question, how do we ensure accountability in data that we share in consent, right? Will a consent artifact be able to do as an, what kind of accountability can we do with them? So interesting question. So for example, when you're doing the consent artifact is where you could talk around saying what the person can do with the consent after, even after it's given, right? Say for example, today, let's say there is a use case where FYU is asking for monitoring of their bank accounts, let's say for the next 6 months, and the AA figures out that for this particular use case, the monitoring aspect is something that they think is too much of information to us. A EA could flag it, right? And you could also say that, in the future, even if you're giving this consent right now, that you will be able to revoke this consent later is something that you could explicitly say in the consent artifact. You could educate them in the consent artifact itself. And also in terms of when if you're an FYU, you could talk about accountability in the terms of saying that, giving them, like, the right customer care number, or places where they could reach out to, or having FAQs both in terms of text or and in terms of videos, or let's say the lot of the new age applications like OK Credit and Kata Book, they move their complete FAQ and support system on WhatsApp, right? So that is something that you could provide. And secondly, let's say, for example, or either before taking a particular financial product, you could say explicitly saying that, this financial product is provided in association with so and so bank and so and so NBFCs, and explaining that also makes it very clear for the user, saying that, oh, I am not really taking a loan, or I'm not taking the service from this application, but there is somebody at the back who's always associated with it, right? So that some amount of explanation upfront, and also giving them arenas where they could reach out to the service in case of where there is any queries. That would be a great place. Or also, if you look at, you could derive a lot of these examples from how people buy cars, right? So when you're buying a car, always we are thinking, most of Indians think about the resale value, the service centers, right? So because it's not about just buying a car and enjoying about itself, but we also think around saying that, oh, if after 5 years, if I have to sell this particular car, does it have a resale value? And if I have to go for a service, is it something that is accessible? Is it something that is cheap enough for me to maintain the car? So that is the similar mental model people will try to bring in even in the digital, right? If you kind of address it, then that becomes a great place for the accountability aspect of it. uh, I'm going to take the next question, which has most votes. What is the role of color psychology in UI UX, especially for fintech apps? This is a very kind of abstract concept, right? You have larger some of the theories from in the color theory. So there are some there are some warm colors, and then there are some cold colors and stuff like that. Especially in terms of fintech, if you look at most of the gold loan companies have orange as their colors, but it completely depends, right? So you could read a lot about it online. It's very little cultural also, but at the end of the day, you the I'll take a very simple example. Let's say HDFC or SBI became great brands not just because of the colors that they used, right? Maybe they added a little bit value to it. It's pleasing to your eyes, but they are great brands because they were able to build it into a great brand, right? Sometimes we also get lost into too much of this nuances of which color and which font and all of it. I'm not saying they are not important information, piece of information. Though me being as a designer, I am saying this. Those are not really relevant things that will help you build trust, right? Having great customer services, having being able to address people, those will actually build like a great brand, right? This is a very abstract question, right? And it completely depends on the context. I'm going to take the
Maybe
next
Dharmesh,
question.
you can take a couple more questions.
Yeah. I'll just take two more questions.
Okay.
How do we ensure accountability consent is met 100% design? That I think we already discussed. Um, right. Okay. So this is an interesting question. Maybe this could be the last question I'm taking. Based on your research, how do you think the user perspective related to each of these principles, reliability, explainability, accountability, uh, differs of the user type, like young millennials or old baby boomers and etc. and all of it, right? Uh, One primary aspect which associates, especially with terms of financial services, is the amount of risk that I could take in my life, right? And it's directly proportional to how young you are. If you're young enough, then you have this willingness to take a lot more risk. And if you're moving towards, like, say, your retirement, then you are mostly trying to be risk averse, right? This is a generic overview of things, right? But specifically, also, largely, some people are very conservative in nature. Like, so one person, that there will be one set of people whom you would talk to and figure out they just don't want to lose their capital, right? And there are some people who would want to go for the high risk versus high returns sort of a mindset, right? So I think most of that themes is something one day, as you talk to people, you will start understanding, saying, for the particular user product that you are kind of building. But the larger theme still holds true. Like, the amount of risk that a person or is willing to take is directly proportional to how young they are. And the second parameter that kind of comes back to it is the amount of disposable income that an individual has, right? I'll give you a very interesting example. So recently we were doing an interview with someone from Mumbai, and he is working in a government. He's working in a municipality corporation. He's working as a driver, and we were trying to ask him, saying that, do you use digital payments? Like, do you use any of these UPI apps like Paytm, PhonePe, or Google Pay? He said, I have heard about them, and but I don't want to use them, right? So we were curious enough to go forward and ask why, right? He said that he told me a very interesting aspect, saying that, listen, I am going to a market, and I want to pay through this app, and I scan the code, and let's say the network is down, okay, and the store owner will start scolding me or start doubting me, saying that I don't have money, and that is why I'm doing this natak of being able to pay, right? Maybe I probably don't have the money, and that is why I am kind of using it as a digital payments, and trying to escape. And when he told me that, it kind of struck me in my mind, saying, I would have never thought about that scenario, right? So I could have confidently walked to a chai shop, even at the shop that I've never heard about it. It's the way you appear, it's the way you carry yourself, and it's the way, like, say, the vehicle they use and all of it. The guy would have let you go, saying that, okay, sir, give me next time, right? But that's not the case with most people, right? And that perception itself kind of hit me hard by saying, oh, probably this financial services that everyone is looking at is completely different from how we are probably looking at, right? So the amount of disposable income, the amount of income that somebody earns, is also directly proportional to which investment that they would opt for, and which financial product that they would opt for or not. I probably think these are two parameters to start with, and going forward, you will see much more if you start doing more of the research, right? Uh, yeah, yeah. I think. Okay, there is one last question. Okay, take this. How critical is integration of local languages? Would you include it as a factor along with explainability? Would love to know your data insights and importance of vernacular languages in fintech products, right? Okay, so one aspect is, let's say, for example, if you're going pure vernacular, most of the terminologies that we use in financial products, it could be interest rate, repayment period, mutual funds, stock market, and all of it, converting it into your pure regional languages loses, because it's not something that people even talk about it, right? We use only stock market, we use only mutual funds, right? We don't know what is the Hindi equivalent of it, and even if you use it, you don't know if people will understand it. That is one thing. And the second thing is also, English is a very aspirational language. Nobody will explicitly tell you that, oh, I don't know to read English. Everybody thinks, or at least think, that they know English. And the third thing is, most of the time we scan for information. Even if you're someone who knows the language, you are scanning for information rather than reading, right? So rather than getting into the debate of whether you should get into regional language or not, we should figure out how can we make the interfaces where when people scan it and they're able to find the information, and any important information can I move towards other modes of communication, right? So we are using a digital product. Why can't we integrate voice, right? Why can't we integrate video, right? Rather than saying that, oh, people will have to read. Like, it's not about whether somebody will understand English, Tamil, Hindi or not, right? One, they don't have time. Second, it's the effort that you put into translating them into these huge pages of text. It's much more easier to integrate a different mode, right? Like, in WhatsApp also, you would have seen a lot of people communicating with sending voice notes as opposed to typing them in the large sentences. We should pick all of these themes and actually incorporate in our fintech flows, is what I believe. Yeah. I think that's it. We can, if there's anything else I can ask.
Super. So thank you very much, Dharmesh. Really, really enjoyed that talk. Guys, could you please have a virtual round of applause for Dharmesh? Thank you
Thank
very
you.
much. And thank you, audience, for all your questions and engagement. As ever, you guys have been great. So Dharmesh, as he mentioned, is kind enough to actually be a mentor for the hackathon. So we have a separate Slack channel set up where you can ask him questions about UI, UX, and design. So I just put the link in the chat for the Slack channel. So do check that out. And thank you once again, Dharmesh. We'll be
Thank you.
back
Thank you.
10 minutes with our next speaker, Manish Bhatia of Lending Card, talking about lending in the age of account aggregators. So see you guys shortly. Please check out the social lounge. Thank you again, Dharmesh. See you guys.
Thank